Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, we are returning after a day-long break on the back of BMC election voting. Of course, today will be crucial. We'll be reacting to a lot of earnings. We'll be watching out for a lot of earnings as well. So yes, lots of action on this Friday on Dalal Street. Of course, Infosys first up will be of course reacting to its numbers. Numbers were fairly okay, but guidance was raised, upgraded to 3 to 3.5%, and in reaction to that, we saw the ADR of Infosys rally up to 10% on Wednesday night. Yesterday as well, it cooled off a bit, but nevertheless, net it was an 8% move on the ADR front on Infosys over the last 2 days. So, market will be watching out for how the shares of Infosys react to the numbers. Aside of that, we have Reliance Industries numbers today, and over the weekend we had the likes of HDFC Bank, ICICI Bank reporting numbers. So all in all, over 30% of the index will be either reacting to numbers or reporting numbers. And in other earnings, other tech earnings, we have Tech Mahindra and Wipro as well reporting earnings. So yes, lots of action on the earnings front, and even the BMC election voting that happened yesterday, counting will happen today. So we will have the results of the BMC elections today as well. So a very, very interesting day. It's a Friday, but an action-packed one. In terms of the cues, global cues are fairly mixed. Wall Street had a good rally overnight. Asian markets were mixed. GIFT Nifty was hinting at a quiet but positive start. So we'll watch out for how we, open for trade after back-to-back losses on Tuesday and Wednesday. So, important to watch out for levels on the Nifty as well. 25,900 on the upside and 25,600 on the downside. Crucial levels to watch out for on the Nifty. In terms of stock-specific action on the show, we'll focus in on all the results, Infosys, Reliance Industries, what to expect from that, other earnings as well. And of course, all your stock-related queries will be in focus, so keep them coming in. We will try and get them addressed as well. But before we do all that, quickly take a look at the top stories at this hour. Stocks on Wall Street ended Thursday's session higher, rebounding from back-to-back losses as chip and bank stocks rally. Asian markets opened mixed after US and Taiwan ink trade deal. The GIFT Nifty, meanwhile, indicating a positive start for our markets in the pre-open as well. Positive ticks, the Nifty up somewhere around 30 points, and of course, Sensex also up in the green. Crude sees its sharpest drop since October as Trump softens tone on Iran. Meanwhile, gold eases as US jobs data lifts the dollar, and of course, as I mentioned, Trump has softened his stance on Iran, which actually stoked a sharp fall in prices of crude. US President Trump adopts a wait-and-see position on Iran, saying he was told the killings have stopped and there is no plan for executions. However, he adds all options are still on the table. Infosys raises FY26 constant currency revenue guidance but leaves EBIT margin guidance unchanged. Margins come in lower than estimate and new labor code impacts profit. In other earnings, Jio Financials reports 8.8% decline in net profit from a year ago. HDFC Life reports numbers that were slight beat to estimates. Reliance Industries is all set to report its third quarter numbers today. Steady quarter expected with profit rising or seen rising over 6% on a sequential basis. Expect O2C segment to see strong growth, and retail and Jio also expected to lead the Q3 show. All right, in terms of the cues to watch out for, just recapping actually what happened on Wednesday's market action. Nifty ended below 25,700 amid a volatile session. The mid-cap index, however, managed to outperform and ended the day in the green, and so is true for the bank Nifty as well. Marginally in the positive, but managed to outperform nevertheless. Metal stocks were, of course, extending their gains. Silver, gold, they were hitting record highs, and metal stocks were reacting to that. So metal index gained for a third straight session. In terms of earnings, we had quite a few of them. In fact, the Nifty PSU bank index was also fairly upbeat. Given the fact that mid-cap banks like Union Bank, IOB reported strong set of numbers, and the stocks reacted quite strongly to the numbers, which also boosted the PSU bank index overall. Real estate sector continues to be hammered but Puravankara and Ajmera Realty rallied post Q3 updates. So there's some respite for some of those realty names. Asian Paints was among the top laggards. Crude prices were rising. Of course, today Asian Paints will be in focus as crude prices have seen quite a bit of a sell-off overnight. Aside of that, in terms of earnings reactions, HDFC AMC, MRPL, these are some of the stocks that reacted to strong earnings. Fund flows, foreign investors remain net sellers. They have sold shares worth 4,780 crore rupees in the cash market on Wednesday. So selling once again exacerbated. DII net buying continues. 5,200 crore worth of equities bought in the cash market. And if you look at the put call ratio, the Nifty put call ratio fell to 0.81 vis-a-vis 0.86 in the previous session. Taking stock of some of the stocks that will continue to be in F&O ban are the likes of SAIL and Sammaan Capital, and these two counters have been in F&O ban for quite some time and continue to be under ban today as well. But on that note, to understand the texture of the market, let me bring on board our guest for today, Raja Venkatraman, co-founder NeoTrader, joining in. Raja, lovely chatting with you. I think I'm talking to you for the first time this year, so wishing you a very, very happy new year. But after Monday's pop, we kind of fizzled out. We saw two back-to-back days of losses. However, we did recover from the day's low. In that sense, what would you expect from the index today? Which way are we headed? And do you expect IT to provide the leg up to the market today?
Yeah, good morning, Nandita, and wishing you and the viewers a very happy new year. Looking at the markets, I feel that the markets is having a lot of resistances at higher levels, and it's almost like you're walking on a dark lane. So you got to be treading your steps very carefully because right now we are awaiting triggers here, and the triggers are not coming through, and that is causing a lot of problems to the entire trend per se. Now, when you rightly spoke about, a huge bunch of, we are in the midst of the result season, and we are expecting that there could be some good triggers provided by the leaders, especially HDFC Bank and Reliance, whose results are due tomorrow. So now, when you take a look at the result season, when you take a look at the Trump factor not settling in as expected, we are seeing that probably the Nifty could bottom out right now and maybe head higher. Now, the head higher will only mean that again at around 26,000, we see that the option data continues to show some strong call writing there. And we are noticing that the FI continues to be net sellers, and this is going to hold the entire market scenario. So now, when are we going to get a strong trended move? When the FIs take a breather, they actually turn buyers, and that's when where we'll get a trend on the upside. Right now, what we are witnessing is some rally to the upside, where again the rallies are being shorted into. So in such a scenario, it's best to go on a stock specific approach. And for those who are participating in the current market scenario, if you are having that kind of temperament to trade on both sides of the market, you could trade that. Otherwise, I would say that wait for Monday to get more clarity on the outcome. So we are having some positive triggers even from the government front, right? The recent election which happened yesterday. Now, when all these things starts coming into the fore and they start calming our anxiety, we will be able to see much more trended action. Until then, it's going to be a reaction which is going to last for a couple of days, and I don't think anything beyond that. Now, talking about Infosys, yes, the ADR did pump up, but then the ADR pump up does not directly translate into a meaningful rise in the on the domestic front. We need to see how that is accepted and how that is demo. You may get a opening gap, but now the most important thing in today's market, either on the upside or on the downside, for the gap to sustain. Now, for the gap to sustain, we also need to see whether there are encouraging triggers that are available. And as we can see, after a long time, the large caps are performing. The likes of Infi, TCS, of course, did not perform. Now, Wipro is expected. So we got to see how these large caps are coming to the fore. And with the guidance given by Infi, I see that yes, probably it could be the bellwether for the IT. Let's see how these things turn out in the coming days. But then the trends remain mixed, so one has to tread cautiously, at least for the next week.
Okay, tread cautiously at least for next week. But just about 3 minutes to go for markets to open. What are your recommendations? Which are the stocks that one should look at in this kind of market where things are so volatile?
Yeah. So what I'm noticing is that there has been a good up move in the cement sector. So I would say that the cement sector is showing some encouraging move to the upside. So I would go with a long in Dalmia Bharat at the current levels, and also ensure that place a stop loss below 2150 for an upside towards 2230. And another long in the PSU segment, because that is a sector that has been performing. So a good reaction which has come and some supports that has been found in Indian Bank. So I would recommend a buy in Indian Bank with a stop at 840 for a target towards 865.
Okay, those are the recommendations. But as we know, the Nifty Bank Index has been managing to outperform, right? Does the setup look more favorable on the Nifty Bank Index vis-a-vis the Nifty? And going into earnings of ICICI Bank and HDFC Bank that will report numbers today, the positioning on these two stocks, the pre-positioning ahead of numbers, or you may call it, pretty interesting. For HDFC Bank, ever since it reported its third quarter update, the stock is down 6-7%. But ICICI Bank, on the other hand, has been an outperformer. So, put into perspective, how would you look at these two stocks from the banking lot? And overall, on the bank Nifty, what's your view?
Yeah, I would say that Bank Nifty has been relatively much more stable, and that has been the trend if you see over the last 2 to 3 months. It's just that it has not been able to fork out a very strong up move, largely because the private banks have not performed, and this time the weight has been carried by the PSU banking. Now the PSU bank continues to hold on, and they continues to do well, and they try to attract attention on the bank index per se. So I would say that going forward, they would be demonstrating more firmness and attract more participation, and they will drive up bank nifty. So a level of around 60,500 continues to remain a very important resistance zone. So I would say that until that level is crossed, we would see some swing action in Bank Nifty. But now zoning down into ICICI Bank and HDFC Bank, always felt that HDFC Bank post its merger has not really, given that kind of flip which all of us expected. And that's been one of the banes for many of the investors out there. And that will continue to remain. And as you rightly said, HDFC Bank, after its updates, has come down. So it has reached some deep oversold position. If the result can be a trigger, then it could be a nice low risk opportunity to enter. Maybe not as an investing bet, but definitely as a multi-day bet. Now talking about
Right.
ICICI Bank is better
Okay.
in comparison. It's come out of its shadows,
Hold that
and I
thought,
see that.
Raja. Hold that thought.
Yeah.
I'll come back to you. Let's just take stock of the market open first. The first ticks are fairly positive. The Nifty is up 60 points as we speak. 25,700 back on the charts. On the Sensex, we have a 260-point up move. The mid-cap index is also moving in tandem with the benchmarks. 0.3% kind of gain coming in on the mid-cap index. The advanced decline ratio at the juncture is skewed in favor of gainers. Mind you, the advanced decline ratio saw a good improvement on an intraday basis on Wednesday. We were seeing that the advanced decline ratio had worsened to 1:3 during the day, but by close we saw the advanced decline ratio at 1:1, the market breadth returning to even Stevens. Right now it's skewed in favor of gainers. 998 advances to 772 declines on the NSE. Let's see, too early to really call it a trend for the day, but let's see. Right now things are looking fairly positive. Look at the Bank Nifty. That's moving in tandem with the other indices, up 0.2%, 59,680. That's where the Nifty Bank Index is at. But IT should be the pocket that we should pull up right now. Yes, the Nifty IT Index is up in excess of 1.5%. Infosys gaining 4.5% on the back of that guidance upgrade. Other stocks that are doing well are the likes of Infosys. Infosys saw a sell-off on Wednesday. In fact, mid-cap IT was out of favor on Wednesday. A good rebound coming in for Infosys as well. Wipro and Tech Mahindra both report numbers. Ahead of that, both the stocks are upbeat. Of course, taking a cue from Infosys, most of these IT names are trading in the positive zone. HCL Tech also up 0.5%, LTI Mindtree up 2%, Persistent up 1.5%, so is Coforge, that's also up 1.5%. Real estate index among the gainers today. Good to see Realty Pack, staging a comeback, mild comeback, so to say, because this index has been hammered out of shape, not just last year, but this year as well has been fairly downbeat for the real estate pack. PSU Bank extending gains from Wednesday up 0.5%. Autos, they have been witnessing some kind of selling pressure. Last few sessions, we've seen the auto index among laggards. Today, 0.3% kind of gain coming in on the auto index. But what's not doing well? Pharma. Pharma has been under a spot of bother in recent times, and today that's the top sectoral laggard, but just a 0.5% kind of cut. Metals are cooling off slightly. Mind you, gold, silver cooled off overnight. Dollar has strengthened after the weekly jobless claim data in the US. So some bit of mild profit taking when it comes to the metal pack. In terms of other individual movers on the Nifty, aside of Infosys, in fact, top three gainers on the Nifty are from the IT pack: Infosys, Wipro, Tech Mahindra. Shriram Finance, that's seen another upgrade that's coming from a rating upgrade coming in from S&P Global. So that stock is up 2%. M&M, Nestle, Adani Ports, NTPC, even Trent is in the green today. Power Grid, Kotak Mahindra Bank, Adani Enterprises, all these stocks are among the gainers. On the flip side, Cipla. We'll talk about this stock in a bit. That stock is down 3.5%. There's some bit of a setback, and we have brokerage notes as well on Cipla. We'll address that later on in the show. HDFC Life, after numbers, the expectations are fairly muted, and in line with that, it was slightly better, but still the stock is down 2.5%. Eternal resumes its downwards move, down 2%. ONGC, that saw good traction on Wednesday, is under pressure today, because crude prices, of course, have fallen quite a bit. Bharti Airtel, Bharat Electronics, Maruti Suzuki, Max Healthcare, these are among the other laggards. But I just want to quickly see what's happening on the Nifty 500 index before I get in Raja and talk about other stocks. On the Nifty 500, you have Zentech. That stock is up 7.5%. India Mart up 6.5%. Angel One reported numbers. Stock is up 5.5%. 361 VAM. That's also up 6%. IFCI. There's some update on NSC, filing its NOC for IPO. IFCI resumes its upward move. And on the flip side, let's take a look at some of the losers then. HBL Engineering, that stock is down 13.5%. L&T Technologies, guidance cut, so that stock is down 4%. MMTC, that was a good outperformer on Wednesday, is seeing some bit of profit taking. And you have Bharti Hexacom as well, and Oil India among the laggards. But yes, all in all, a positive start. Let's see whether or not we maintain this momentum and remain above that 25,700 mark as we progress through the day. But, Raja, coming to you, Cipla down 3%. In fact, the entire pharma pack has been under pressure of late. Any thoughts? What are you making of the moves on Cipla and, stocks like Dr. Reddy's, even some CDMO names, Laurus Labs, etc.? Any thoughts there?
Yeah, see, the way the pharma sector behaves, they're largely driven by these news flows. So, right now, what you're observing is some reaction to the news flow. And the gap down scenario, especially in good trended stocks like, say, Laurus Lab or Biocon, or I would say even stocks like Dr. Reddy could be a good opportunity to get into, because I see that the pharma is a good sector for doing swing trading. So rather than intraday trading, so any dip in these names should be definitely bought into. But I would say that Cipla, on the other hand, is showing some weakness out here, and I would say that if the fall today does not, it is not able to rebound from here, then it is actually giving us a major exit call from our portfolio, because from the likes of 1600, it's almost dropped down 200 points. So, which is not a good sign. And I would say that the pain could extend further, because every rise in Cipla now could be sold into. So, I would not buy into a Cipla, but definitely a Laurus Lab or a Dr. Reddy or an Apollo Hospital is something which I would definitely look for.
Okay, that's about pharma. But once again, touching upon IT, because I want to take stock of L&T Tech. It has lowered its FY26 constant currency guidance, revenue guidance to mid-single digits, reported a 7.9% decline in net profit, saw an exceptional loss of 35.5 crore rupees, and the revenue from operations was also down almost 2%. Although margins did see some improvement on tighter cost controls, the constant currency revenue was down almost 3% on a quarter-on-quarter basis versus an estimate of 1.5% growth. So of course, disappointing numbers, and the company is also shifting its focus a bit, and not in fact it is not going to focus in on low hanging fruits, so to say. So some bit of a change in strategy there. L&T Tech, the stock did see a good amount of uptick after its second quarter numbers, right, as the entire IT pack saw some traction, but that has fizzled out. And if you look at the last 1 month performance, the stock is down in excess of 11%. At these levels, what should one do, and would you at least look at the stock from a risk reward perspective, or would you look at other names, mid cap names like Persistent, Coforge in the IT pack?
Yeah, I would say that LTTS over the last entire, last 3 quarters of 2025 has not done really much. And now once again, it's begun its journey once again to the downside. And I would say a 4,000 level is a very important level which it has defended over the last many months. And I would say that if that level is broken, there could be some very strong reaction to the downside. And overall, I have been maintaining that IT is not the picture is not very clear. The trends remain mixed, with the trend more on the bearish side than on the positive side. So, like we said, the names of Persistent and Coforge, they continue to do well because of their innovative approach, and they are continuing to hold on and perform better. So now maybe Infi also will join them. But overall, I feel that the trends remain mixed. So IT should not be considered as a overall on the positive side. I would say that the trends are remaining confused, and the pressure in LTTS is to the downside. So a 4,000 level will be an important level to watch out for. So I would not advise buying right now.
Okay, that's the view. Trend is more on the bearish side and not advisable to buy into an L&T Tech right now. But let's talk about the AMC shares, right? HDFC AMC reported good set of numbers. We saw the reaction come through on Wednesday as well. And today as well, the stock is extending its gains. I think it's up somewhere around 4%. In the last 2 sessions, it has gained almost 6% or so. And ICICI Pru AMC, of course, it's a recent listing. The profit rose 45% and total income was up 35.5% on a year-on-year basis. Both the stocks are upbeat today. Any stocks that you like within the AMC pack? Would you look at HDFC AMC?
Yeah, I would say that in the last few weeks, the metals, the PSU banks, and the capital market stocks have been able to hold on and generate some momentum. So I would say that HDFC AMC is showing signs of bottoming out, and with also an encouraging number, I can see that the stock run could extend, but the run will be limited, and I would say that around 2800 is an important level to watch out for. So beyond that, if it is able to sustain, then it could become a good upward traction for the coming months.
Okay, that's the view on HDFC AMC, and of course the ICICI Pru AMC as well, that reported numbers. But any thoughts on Yes Bank? I'm coming back to the banking, some of these banking names. There's been an update. The RBI has granted in principle approval to Sumitomo Mitsui Bank, SMBC, so to say, to set up a wholly owned subsidiary in India. Now, SMBC currently conducts banking operations in India in branch mode through 4 branches located in Delhi, Mumbai, Chennai and Bengaluru. Now, this approval allows the lender to establish the wholly owned subsidiary through conversion of its existing branches in the country. Of course, the SMBC acquired a 24% stake in Yes Bank, and of course, this approval from RBI allows it to convert its branches into subsidiary. Of course, sets the stage for potentially a controlled transaction for SMBC in Yes Bank. The stock is trading at 23 right now and has seen good traction, right? Last 1 month or so, it's up almost 8% or so. Would you look at this stock? It's not very far from its 52-week highs as we speak.
Yeah, see, when you're going to talk about stocks like Yes Bank, Vodafone, Suzlon, you got to understand that what is the kind of timeline you have. How much patience do you have to, see your investment? So it can't be a trading bet. It will have to be an investment bet. And how long can you hold on to this stock? Because the stock is heavily dependent on more news flow than any kind of triggers. So the triggers which are emerging are encouraging, but I would say that if you're having say a 1 year horizon, then the up move can emerge and take it towards the region of around 40 levels. Otherwise, I see that the stock is going to oscillate in this kind of movement only. So I would say that you have to first decide what kind of trade which you want to take. If you want to take a long-term bet, then yes, the potential is definitely developing and it's looking encouraging. But if you're looking from a short-term perspective, then you should skip Yes Bank.
Okay, that's the view. But let's now shift focus to all the viewer queries that we are getting at this juncture. Quite a few of them, and I have tried to squeeze in as much as possible. But MCX, that's one query that's come in from Anil. Wants to know the long-term target or the view on MCX. In fact, I think his time horizon is 1 year. Stock has been on a tear, hit a fresh 52-week high today as well, up 12% in the last 5 sessions itself. At these levels, would you suggest caution? Would you wait for dips to get in, or do you see room for more upside? And would you advise taking a positional bet right now?
Yeah, so one thing which I always maintain is that when a stock is on a tear and when even the sector tailwind is also there, the probability of the stock to go higher is very much on the cards. Now, at such a juncture, how should we plan? We should first enter into that stock because the stock is going to move like you. If you'll ask me whether I should enter into the metals now, then the obvious, when you look at the price and say Hind Copper has moved by 150, 160 points in just a matter of 1 month. So now, is it worth entering? Answer is yes. But then you should not enter 100%. You should enter some portion of your investment and then some you should look to buy on dips because I see that the price is doubling from here in the next 1 year. And any dips closer to the region of 2000 would be a good support region. So that's how I will plan my entry into MCX.
Okay, that's about MCX, and I hope that answers your query. I had spotted a query on Geo Finance from Ranjit. Wanted to know the short-term view on the stock. Of course, numbers came out despite an 8% drop in profit. The stock is up a 0.5% today. But any thoughts here on a Geo Financial?
Geofinance has not been able to generate the kind of momentum on the price action, but on the news flow, definitely there are lots of things that are buzzing around Geofinance and closely linked to Reliance. So there is a hope which is tied to Geofinance. But I feel that there are better prospects than Geofinance to trade in. So I would say that one should have, even if you're going to look at it from an investment perspective, one should have a clear risk below 275. So below 275, I don't think one should be holding on to Geofinance.
Okay, that's the view on Geo Finance. But just a disclaimer here. Money control is a part of a network 18 and of course which is part of Reliance Industries. So before making any investment decisions in Reliance group of stocks, please do consult with your financial advisor. But next, I want to take up a query on the real estate pack that has been hammered out of shape. Manish Kumar has written in, wants to know your thoughts on Prestige Estates. The stock is upbeat today. In fact, last 5 days it has seen some traction despite the real estate index being out of favor. But the stock, 6 months you've seen a double-digit decline, and it's quoting at 1540 or thereabouts at the current juncture. It's quite a way away from its 52-week highs, and as we know, real estate stocks have been out of favor. Prestige Estates in particular, how is this stock poised within the real estate basket? And would you look at this stock from purely a risk-reward perspective? Good time to get in after the kind of badgering it has seen. Do you think real estate stocks are poised for a good turnaround anytime soon?
Yeah, I would say that the stock has definitely come into some good set of supports, and with the Bank Nifty showing some poise to move higher, I would say that if the momentum shifts on the upside, then I would say that this could be a good risk to reward ratio to get into prestige estate. So yes, this is definitely a good time to get into the real estate, and if the real estate basket, of course, I would wait for the news flows to emerge over the weekend. And once the market starts picking up, then this could be a good stock that you can consider.
Hmm. Okay, that's the view. Once the market stabilizes or real estate stocks stabilize, prestige estates a good bet to look at. There was a query I spotted on UPL coming in from GC Prakash. Wants to know what's the short term view on UPL where one can book profits. He's taken position at 775 rupees. The stock is at 786. So slightly higher than his buy price. What would you advise, and any targets that he should be watching out for?
Yeah, so the entry has been at a good level, and I feel that UPL has more room over the next, I would say, over the next 6 months. It has got room to move towards 900. So I would say that one should hold on with a stop below 720 because it definitely augurs well for an up move here, and I see that the momentum could build up, especially amongst the chemical basket. UPL definitely is a preferred bet.
Okay, UPL a preferred bet among the chemical basket. Any thoughts on Bharti Airtel? Advait Joshi has written in. He wants to know the long-term view on Bharti Airtel. Of course, it has seen some bit of a correction in recent times. Would you look at Bharti Airtel?
Yeah, Bharti Airtel has been moving along quite swiftly over the last 3 years, and it continues to attract domestic as well as institutional attention. I would say that in the telecom space, Bharti has been performing quite well, and I would say that the any pullback in the stock should be bought into. So currently, it is witnessing a pullback. So you can keep looking at the pullbacks. If you want a more deeper pullback, that will be closer towards the 1850 region. So these are two levels which are clear support for Bharti.
Okay, watch out for those levels on Bharti. I hope that answers your query. Just couple of more queries to go then. Dr. Naidu has written in, wants to know your thoughts on the prospects of NBCC. The stock is 0.5% up, not doing much today, and it hasn't really done much over the last 5 days either. Any thoughts?
No, I would say that this stock does not give the kind of run which one always expects, and this we have discussed earlier as well. So basically, it is stuck in a range between 125 on the upside and around 100 on the downside. So I would say that this range could persist for a while. So unless and until this range is broken, one should not be looking to 100 on the upside. If it is not broken, then it's best to ignore this stock for now.
Okay, that's the view on NBCC. Hope that answers your query. There's one stock that's been in focus, and that's IFCI, of course, ahead of the NSE IPO. Saw some correction on Wednesday, but the stock has been on a tear. Anil Kumar wants to know your thoughts and whether it's advisable to buy at current levels.
Yeah, looking at the kind of news flow and looking at the kind of participation which we are seeing today, it's clear that there is a fresh momentum that is getting built in. So yes, at this current juncture, it augurs a buying opportunity, and one can look at participating in this counter as volumes are also spiking. So it says that there could be some fresh move here. So yes, it's definitely worth participating.
Okay, definitely worth participating. One stock that I noticed, I think it was HBL Engineering. That stock is down 11%, and it's pertinent to take up a query on that. That's coming in from Shweta Naidu. Buy price is 911. Should I book losses and exit, or should I hold an average? The stock is quoting at 780 right now. It's shaved off 11%. I mean, she's making quite a bit of a loss here. What should she do?
Yeah, the overall prospects of this stock is showing that yes, there is some profit booking in store, and the reaction today is clearly indicating that there is pressure to the downside. So I would say that one could hold with a stop at 750 levels, because beyond 750, where there is a nice value support region, the prices could move in further, so it can go down further. I would definitely not advise averaging out here, because the trends in this stock have turned to the downside for now. So your risk or your stop could be at 750.
Hmm. Okay, I hope that answers your query. Last query then. This one's coming in from Ram. He wants to know your thoughts on Alchem Labs. Hasn't sent in a pointed query. I know we've discussed pharma stocks, but particularly for Alchem Labs, what kind of levels should one watch out for, and if one has positions, how should they approach? And if one wants to get in right now for fresh buying, what should the approach be?
Yeah, after a while, the stock has shown some movement here, and over the last 3 to 4 months, the stock has managed to hold on to the high level. And like I said, the pharma remains mixed. So, Alchem Lab is on the positive side, and the current juncture augurs well. You can buy at current levels. You can use dips to the region of around 5,700 also to get into. So overall, the stock remains on the positive trajectory, and I would say that one can look for some encouraging moves in the coming weeks. So this is definitely a hold, and if you want to participate at current juncture, also it is a buy from my side.
Hmm. Okay, Alchem Labs a buy from Raja's side. But with that, we've come to the end of the query segment. If we couldn't take up your queries, please don't get disheartened. Keep them coming in. We'll try and get them addressed as and when you send it. Raja, thanks a lot for taking out time and joining in. Always a pleasure. Look forward to more interactions, and have a great weekend ahead.
Yeah, same to you. Bye.
Thanks a lot. On that note, we're cruising along. Looking at the market, we are up 40 points on the Nifty. 25,700 holds for now. Let's see whether or not we manage to do that as we progress through the day. IT, that's the sector that's grabbing the limelight. 2.5% gain. Infosys up almost 5%, followed by the likes of Infosys, Wipro, Tech Mahindra, all of them gaining anywhere between 2 to 5% apiece. On that note, let me bring on board big market voice Sushant Bhansali, CEO of Ambit Asset Management, joining in. Sushant, always a pleasure chatting with you. First of all, wishing you a very happy new year. I don't think we've interacted this year so far. But, after a 10% gain in calendar year 2025, we've got off to a somewhat rocky start. We did see some kind of a pop on Monday after the commentary coming in from the US ambassador to India, but that kind of fizzled out. But looking at the earnings, things are not looking all that bad. Do you expect a turnaround pretty soon, or do you think the tariff turmoil and FIS sell-off, these are some of the factors that would keep the index or keep the market at large under pressure?
Hi, good morning. Thanks for calling. I wish you a happy new year too. Yeah, definitely. I think 2025 was challenging, although the year ended with a 10% gain and 10th year in a row Nifty was positive. But it was an eventful year. In 26 doesn't look like less eventful. The tariff uncertainty continued, and we don't know whether it will happen in the trade deal in the next month or so, or a couple of months from now. But hopefully it will get resolved. Who knows, new issues might get cropped up, as has been happening in the last 1 year. Now, from Indian market perspective, I think budget is the most keenly watched event in the next couple of weeks. And that's where I think we are all right now focused on to see what's the mood of the market will be post that. A few important things which I think will decide the earning trajectory as well going forward alongside the directive.
All right, got your point. But looking at the earnings thus far, of course, it's majority of the IT names that have reported numbers. HCL Tech, TCS, Infosys, the most recent being Infosys. What have you made? Of course, we've seen a guidance upgrade coming in from Infosys. From a valuation perspective, after looking at the numbers from the big three, would you, take a bet towards large caps, or would you still say that mid caps are better poised? Especially since the commentary alluded to the fact that there's been some visible improvement in demand compared to the last quarter in AI services, etc., and also the kind of AI pivot we are seeing from some of these IT companies. What would what would your thesis be when looking at IT? Mid cap versus large cap, commentary wise and numbers wise, what did you make of it?
Yeah, I think mid cap will continue to shine like they have for the last couple of years compared to large caps. And I think at least first half of this calendar year, mid caps will continue to outperform the large caps. Hopefully, towards the second half, we'll see large caps making a comeback in terms of growth and margin trajectory. But at this point of time, I think mid caps still, I think from valuation comfort, you have large caps from a long term perspective. But from a return perspective, first half of this year, I think still mid caps are the place to go.
Okay, I just want to ask you, in this leg of the volatility that we have seen, what is your strategy at the current juncture? Are you guys sitting on cash? Are you guys looking to deploy? If yes, which are the pockets that are catching your attention?
Yeah, I think selectively cash creation, mostly in I think small cap segment. Large caps, I think there is no point on trading cash because they're not the opportunities are not expected to be very fruitful like corrections expected. But definitely in small caps, I think we are waiting and watching the earning growth. So far has been, I would say, in line and will probably a bit ahead. But these are early days, and companies resulting having good earnings result quickly, while the second half of the earnings season is what decides. I think the overall earnings season. And we keenly wait. I think the small caps is where I think we are a bit skeptical, and in fact, the earnings season will coincide with budget as well. So, a combination of those two can drive the markets again, and we're waiting for reactions to those of them.
Sushant, a lot of these market experts and fund managers that I have spoken to have said that perhaps 2026 could see mid cap staging a good comeback. Of course, last year we saw both mid and small cap indices and stocks underperforming benchmarks and large caps. Would you say that mid caps are ripe for a comeback? And if one has to go looking for value within the mid cap space, where would you look?
Definitely, typically mid and small cap go down together, and that's what we saw last year as well. And mid caps make a comeback quicker than small caps, so which is what I think everybody is expecting. That towards I think fiscal year 27 or most likely in H2 of this year is when mid caps should make a comeback. And towards the end of year and early next year, I think is when I think small caps should start shining as well. From a sectoral perspective, I think mid cap is a small segment, just about 150 odd companies from a semi-definition or definition perspective. So not too much of sector variety, but BFSI, I think on the mid cap side is I think one of the key sectors alongside I think healthcare and a bit of pharma names. I think these three will be where we'll lead. The consumption names are mostly in either large caps or small cap, not too many mid cap names on the consumption basket, which can be a big theme for 2026.
You mentioned BFSI. Bank credit growth has outpaced deposit mobilization, and that has pushed the system credit deposit ratio past the 79 to 82% mark. And recently SBI research has flagged rising risks around this trend. From your perspective, does this elevated credit deposit ratio pose a structural liquidity concern for Indian banks, and how should investors think about the implications for margins and funding costs going forward in the wake of all this?
No, I think it's a big trend given that more and more money is flowing towards capital markets and to bank deposits. It's been an area of concern. I think government also has taken many steps in the last couple of years to get this anomaly right. We look at the capital gains, how the treatment got changed. I think a large part of it was towards channelizing the savings to deposits as well and make them probably in line with capital market instruments on the fixed income. And I think we keenly wait if there are any more incentives for deposit mobilization in the budget, because the banks really need something of that sort to. I think the growth of economy, banks play a very important role. The lenders play a very important role, and if they don't get access to deposits, growth, there will be the credit growth will suffer, and this will ultimately lead to the economic slowdown as well. I think government also will be putting effort behind getting these deposit rate right.
Okay. All right. Any other pockets that you would look at, the likes of defense, EMS for that matter? EMS has seen a very, very sharp correction, severe correction, so to say. The likes of Dixon Tech, etc. Post the kind of correction we've seen, would you say that there is room for more correction, more froth to come off, or do you think the investment case is still strong and now is a good time to look at these names?
It's a very volatile sector from a market's perspective. The long-term story, I think, remains intact. They are here to grow. There are more and more opportunities getting into the AMS side. What started with a simple mobile phone or washing machines, etc., is getting into many more things. Hopefully, we'll get into, as we saw in autos, that when the OEM started having bases out here with auto ancillary, the weight moved in the between 80s and 90s and early 2000s. I think similar sort of play in consumer durables. I think EMS will play a big role, and with chip manufacturing also coming in, hopefully there will be a lot of value addition by these companies. From long-term trend, I think it's a great sector to be in. From a short-term perspective, I think liquidity drives both mid and small cap, which is where most of these players are. And it's more about, I think, liquidity deciding the price volatility as compared to earnings. Earnings will always be volatile in this sector, depending on how the summers go and how. So long-term investors, I think, should keenly look out for good opportunities as and when liquidity throws them to investors. And for select companies, I think that this might be a good time in the next 1 or 2 months. Also, we should look at what are the announcements regarding PLI, etc., because that also plays a big role in this sector. And so one should wait, I think, till budget for these announcements before taking fresh allocations.
Okay, wait till the budget. But one sector that has been hogging the limelight is the metal pack, right? You've had the likes of Vedanta, Hindustan Zinc, Hindustan Copper, all of them, taking off, and how, in tandem with how global metal prices are moving. We'll talk about the hard assets in a bit, but in terms of metal stocks or metal as a sector, would you stick to the non-ferrous ones, or would you prefer ferrous? Because now that steel safeguard duty is also in place. But in terms of an investment case, which side would be a compelling bet?
Very difficult. 2025 was probably a metal sale. It started from precious metals and went to ferrous, non-ferrous, everything. I'm more worried about the impact of metal prices going up on earning growth or rather margin profile of companies which use them as raw material for 2026. That's a bigger story to watch for than looking into, because there are very few players on the metal side, and it's quite volatile. They are a good trading place, but for long-term investors, I think it becomes very difficult to invest in these sectors. So one should, I think, they're not cheap. So trading wise, probably there are still opportunities which will come in. It's quite volatile as well. But I think the impact of many of these metal prices, which are as raw materials for companies, I think these are ones one should be watchful for. There will be huge margin impact this year, because there has been big inflation in most of these commodities in the last 3 months.
But what should the strategy be if someone holds metal shares? Is it a good time to take some profits off the table or stay invested?
Depending on which commodity you are in. But yes, I think timely booking of profits is a good strategy always. And one should probably, I think this is not a time to increase your allocations, and rather definitely either maintain or reduce your allocations selectively. You can rotate from one to other as well if you are wanting to maintain the allocation, looking at opportunities which uh, can look for that better return from the next 2 to 3 months perspective. Very difficult to take calls of 6 months and 12 months in this segment because prices are decided globally and global trends, geopolitics. We don't know which country will get threatened, which country will what. So it's very difficult to take calls on global prices.
Yes, that's correct. But what are you making of, or how have you really navigated this up move in hard assets? In terms of asset allocation, because 2025, of course, we saw stupendous gains, and of course, with all the geopolitics playing out with respect to Iran, Venezuela, etc., we've seen the silver and gold prices continue to rally. But do you see much more upside from here? And in that sense, have you increased allocations? What are you advising your clients? How are you going about it?
Precious metals, I think that pack will continue. I would say growth a little bit at a slower rate than what happened in 2025, because the reasons behind the surge are very much still there, and that shall continue. So once I think dollar again becomes sort of a preferred currency for global trade and central banks, is when I think this. Growth will probably subside. But till then, I think it will continue to grow. And that's, I think, the biggest factor in this whole really. And one should keenly watch the more volatile the global geopolitical environment is. I think the more volatile this segment will be.
One more question on financials. I want to go back to because just want to understand your preference between banks and NBFCs, because gold financiers, of course, have been doing well in tandem with how the gold prices have moved. On the other hand, you also have financials where a lot of foreign capital has come in, the likes of Shriram Finance, even Yes Bank, and a lot of these smaller banks as well. So, what's the preference between banks and NBFCs right now? And even within the NBFC space, is there a particular segment that you're looking at?
I think all segments are from the entire BSFC pack, the all lender pack, I think is looking really good in terms of, I think credit growth should come back massively towards, I think in FY27. Everybody is excited towards that. The rates, I think, have reduced to the extent they had to. I don't think there's too much of lowering of rates now into play. So from that perspective, there will be, I think, whatever margin correction people had into their mind, it has all played out in the prices many of these stocks already. So the entire pack looks good. Definitely, I think banks will be the first one to get the benefit. But NBFCs, I think, as credit growth picks up and as NBFCs are able to access capital from banks as well, I think NBFCs, some segment of them have started. I think auto and gold financing companies have done really well basis both the certain gold prices as well as demand on the auto side. I think other segments, especially consumer lending, that I think should do really well. It has not done that well because the whole consumption pack itself was not doing well. But whatever measures government has taken in the last 15 odd months, starting from direct tax cuts, income tax rationalization, liquidity infusion in the system, getting, I would say, even from central bank to get NBFCs again back into line in terms of providing liquidity through banks to them. All of these things, I think, will get a lag effect on the consumption side, and we expect that probably in the next few months itself, the consumption should come back, and that should lead to the consumption led NBFCs to do really well in FX.
Okay, got your point. But within the consumption pack itself, What are you more tilted towards? Staples, durables, premiumization? What is it that you would look at? And also within the auto space, how would you really play? Because Q3, sales for autos has been very good. Of course, that was being expected as a result of the GST cuts. But would you say that much of the upside is already taken place in autos, and should one look at auto ancillaries instead? How are you playing all this, the entire consumption theme as a whole? How are you really playing it?
So I think auto has got a very different flavor compared to the whole consumption pack. I think auto started the whole consumption rally, and I think will continue. There are many state elections which are, I think, in the first half itself. There are about 5 state elections, so that will be a big driver for both auto as well as other consumption pack. The interest rates have come down, so financing will be cheaper. Direct tax benefits and indirect tax benefits, staples and etc. will also be available. So a good part, I think, on the consumption side. Staples versus discretionary, I would say that more demand will get affected on the discretionary side than staple side, because financing etc. will help more the discretionary side than the staple side. So more gung-ho on that. Having said that, staples as a category has not made meaningful returns in the last 3 years. There will be, I would say, a bit of sector rotation, investor preference. It will also depend on how other sectors play out. I think staples will be a natural beneficiary of funding downgrades in other sectors. So if IT doesn't come back the way it has continued, I think, in the last 1 or 2 years, if credit growth doesn't come back, then consumption staples will be a natural beneficiary of sector rotation.
Okay, got your point. Last question, really, if I were to ask you your top 3 themes in a pecking order, how would you, really, rate it, and what would you say?
Yeah, so I would say that like if I have to pick 2026 themes, autos will be number 1, followed by BFSI, and then by other consumer discretion.
All right, okay, got your point. With that, Sushant, would like to thank you for taking our time. Always a pleasure, and wish you a very happy weekend and a good year ahead. And of course, I hope to interact much more going forward as well.
Thank you so much.
Thanks a lot. Let's just take a look at the market. We're up 79 points now, almost at the high point of the day, 25,750 on the index. The mid-cap index has is outperforming at the current juncture, gains in excess of 0.5%. The breadth has improved 3:2. That's the NSE advance decline ratio. 1618 advances to 1100 declines at the current juncture. But one stock that will be in focus today, aside of the IT pack, index heavyweight Reliance Industries, because that's reporting numbers today. A steady performance is expected in the December quarter, supported by a recovery in its oil to chemicals business and sustained growth in its telecom and retail segments. Now, these gains are likely to offset weakness in its oil and gas exploration and production business. Now, brokerages are estimating mid-single digit to low double-digit growth in revenue and operating profit from a year earlier, with net profits seen rising modestly amid mixed performance across business segments. Q3 consolidated revenue is estimated to be at 2.5 lakh crore rupees, implying a growth of about 6% from the year ago period. EBITDA is seen rising 10%, while profit is expected to rise 4%. The O2C business is expected to be a key driver of Reliance's quarterly performance, and higher Singapore gross refining margins during the quarter and improved refinery throughput are likely to boost refining earnings, even as petrochemical spreads remain relatively soft. Talk about consumer-facing businesses. They are expected to continue providing stability to consolidated earnings. Reliance Jio's performance is likely to be supported by higher average revenue per user, or ARPU, and subscriber additions, translating into steady growth in operating profit. Reliance Retail is also expected to maintain its gradual recovery, contributing positively to consolidated EBITDA during the quarter. But upstream oil and gas segment is expected to remain a drag on Reliance's overall performance. So yes, Reliance Industries, the stock is up somewhere around 0.3% or thereabouts, but the stock, after a good performance last year, hasn't seen that great a performance so far this year, and it's come off almost 200 rupees from its highs. But let's see if the numbers can turn the tide and the stock can resume its upward trajectory here on. So that's about Reliance Industries. But another important update today, of course, it's the counting day for BMC elections. The exit polls have projected a massive victory for the Mahayuti in the BMC polls, with the BJP Shiv Sena alliance set to cross the 130 seat mark in the state. In contrast, the Shiv Sena MNS alliance is expected to lag far behind, with projections placing it at just over 60 seats. Congress, meanwhile, is likely to get around 20 seats. Counting of votes begins at 10 a.m. Of course, must have just started, and the results will also be announced later today. So that's one thing that we need to, of course, watch out for. But on that note, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your news and updates. I'll see you with Closing Bell at 3 p.m. So don't forget to tune in for that. Thanks a lot for watching.